Stocks swing between gains and losses ahead of the budget and the US Fed Reserve meeting. Utilities and energy stocks take a beating led by the Adani counters, while IT shows some resilience.
Adani Group CFO tells CNBC-TV18 that he is confident of the fixed price offer of Adani Enterprises sailing through on the stated terms on the back of institutional investor interest.
And Bajaj Finance perks up on reporting strong growth in credit, healthy asset quality and margins, while an all-round beat of expectations by NTPC charges up the stock.
Data patterns leaps after sales and profits more than double, but BEL slides on sharp dip in margins.
Hello and welcome to Halftime Report. I'm Ekta Batra, with me Sonia Shenoy as well as Mangalam Malu. Well, it's turning out to be a session where we have definitely recovered from the day's low, so there is some amount of optimism and strength ahead of a whole host of cues that we have to reckon with. Yes, Adani is the top story that we are dealing with, but there are a lot of numbers to watch out for and a lot of earning reactions which we shouldn't be ignoring at this point. For example, Bajaj Finance, which is one of the top gainers on the Nifty, Bajaj Finserv, which comes out with numbers today, Larsen & Toubro, which is close to a fresh high. So that one is coming out with numbers today as well. So a lot to discuss over the next 60-odd minutes. Hi, Sonia. Hi, Mangalam.
Hi, Ekta. Hi, Mangalam. In fact, this is the biggest week for financial markets, right?
Yeah.
Generally, the budget is touted to be the biggest day. So in that context, it's the penultimate day before the budget. The good part is for today, the Nifty has held on to the support of 17,450. So that's the support for the day, and holding on also to the 200-day moving average, which is around 17,300. Now, a couple of stocks that are on our radar. Bajaj Finance, of course, is the biggest Nifty gainer right now. The fact that it's on track to meet its full-year guidance is something that the street definitely likes and has taken with both hands. And there are some really aggressive target prices on the street. So just two cases in point. JP Morgan, Morgan Stanley have target prices of between 8,000 and 9,000 on Bajaj Finance, and it's well above where the current market price is. The other one is L&T. Going into its numbers, it's a tad bit weak today, but largely it's had a good upside in the past quarter or so, and the numbers are expected to be solid as well. Revenue growth of 16%, EBITDA growth of 19%. So that's the other stock that I'm looking at. And a pocket on the whole that deserves mention this morning is the auto ancillary space. Mahindra CI, Minda Corporation, autos have come back in a big way. So this is one space where there's buying action as well. So amidst all of this chaos, right, and the Adani Group, the FOMC, the budget, there are some pockets of value that this market is finding.
It is. And, you said it right when you said amidst all of this chaos, because there are weeks when nothing happens and there are days where weeks happen. Because I'm just looking at the range on the Nifty today. It's a 250-point range. And all of last 10, 15 days before this Adani saga unfurled, we had the Nifty trading between an 80 to 100-point range. So, well, that's the market for you. And we do have a bunch of stocks in focus as well.
Yeah, just before we get to that, I just wanted to point out Laurus Labs, which came out with its numbers just a couple of minutes ago. Laurus Labs is up around 2% reacting to its numbers. Revenue is up 50% on a year-on-year basis. So it was expected. We were anticipating a revenue growth of around 47%. So it has largely met expectations. EBITDA has come in with a growth of around 41.4% year-on-year. And we were anticipating around a 50% growth. Margins have come in at 26.1%. We were anticipating around 28%, but nothing really to write about, considering that it is still a very strong revenue growth that they've reported this time. Net profit up around 32% on a year-on-year basis, and the street was anticipating around 185 crores in terms of absolute numbers. It's coming at around 200-odd crores. So good performance coming in for Laurus Labs. Stock is up around 4% at this point.
All right, 4% higher for Laurus Labs, but remember from the highs we have seen a near 40-45% decline on that counter itself. Let's get to the management as we promised. We have with us Kirloskar Pneumatic. They posted a strong set of performance in their third quarter. The revenue is up 37%. The EBITDA has also more than doubled. The order book of the company at 1,300 crore rupees, which is higher by about 100 crores from the previous quarter, which is the second quarter. We have with us Suhas Kolhatkar, who's the VP and CFO at the company, joining in. Thanks a lot, Suhas, for joining in. Just a couple of questions. First up, if you could give us what the execution timeline of your 1,300 crore order book is. And secondly, what was the contribution of exports in your third quarter? What does that take your 9-month number to? You had a target of 150 crores for this year.
Yeah, hi, Mangalam. It's nice to be back on this show again. We posted over 880 crore sales for YTD. The growth came from exports. And as indicated in the last quarter, we did achieve 150 crores exports by end of the third quarter. So today, compared to previous year of just 22 crores, in 9 months, we have done about 150 plus crores in these 9 months. So a substantial growth has come from the export business.
Okay.
While,
Sure. Please
Yeah,
go
go
ahead.
ahead.
Please go ahead.
no, while we see overall growth in the domestic market also, but the export has contributed substantially to our growth story, where we have almost 41% growth over the previous year.
Okay, so 41% growth is what you're seeing in the export market. Can you tell us a little bit about the domestic market growth as well? You cater to a lot of sectors: steel, cement, pharmaceuticals, railways, and now we're seeing a big pickup, in investments and capex across these spaces. What is the kind of growth that you're looking at? Your overall revenues growth was almost 40% in the quarter gone by, but particularly from the domestic market, what's the growth looking like by the end of FY23, and what are you projecting for FY24?
Well, for FY23, I stick to our guidance, which was given in the last quarter also. We should be able to see about 20% growth for the whole year. While exports orders have been mostly executed, though we have few orders in the pipeline for the execution in the fourth quarter, the rest of the growth will come from the domestic market. We see a YOY growth in the third quarter in the domestic sales close to about 13 to 14%.
Okay. One of the segments that you do cater to is railways, and we've seen a lot of impetus towards the entire railway sector, a lot of order wins, and not to mention that we will probably hear more this week from the budget as well. Can you just tell us what your experience has been with the entire railway sector, say in the past fiscal? How much have you procured in terms of incremental orders? How much do you expect to procure? And is that a huge growth segment for you all?
Well, little correction on that, if I say so. Kirloskar Pneumatic is predominantly a compressor manufacturing company, and 95% of our turnover comes from the compression segment. So though railway is one of the key markets for us, we have a less than 5% share in our total revenue coming from the railway market. This year, railways have really, the business from the railways have given us some growth in terms of supply of gears and pinions. And we also supply some types of air compressors. The real growth has come from the oil and gas sector, because that's the sector where we concentrate on. The compressors, the air compressor sectors for us has shown little degrowth, in the sense that the requirement of compressors for the oxygen generation has come down as the COVID came under control. But so far as the refrigeration compressors is concerned, we had a good pickup coming up from our cold chain and ice plants market. So that's been the contributing factor in the growth, apart from the CNG market, as well as the gas systems or the gas packaging in the overseas market.
On this itself, I wanted to know, Suhas, you had earlier mentioned that there is potential for 8,000 compressor packages in the gas business. How much are you aiming to get there? You have 30% market share, so ideally it should be around 2,400 compressors. Refrigeration, you have around 55% market share. Where does that go? And in air compressors itself, screw compressors are 75% of the market, but that doesn't account for too much in your revenues. Where does that number go?
Okay, overall numbers, we do about 20 to 25% in the air compressors, where the screw and the reciprocating compressors come in. About 30 to 35% come from our refrigeration market, and about 40 to 45% comes from our gas market. Now, if you look at the gas compression, the 8,000 numbers that you talked about, this is emerging out of the 9th and 10th round of CGD cleared by the PNGRB. The 11th round has also come up, and the actual numbers of gas station installations is yet to happen. Okay. Now, there is a set pipeline or the set timeline within which these installations are required to happen. Roughly 1,000 numbers from 9th and 10th, and 500 numbers from the 11th round are expected to get commissioned in next 7 to 8 years. I'm talking about annual quantities.
Okay.
So about 1,500 numbers annually will get installed. And there are two types of compressors coming in the gas market. So 8,000 numbers which we talk about basically comes from the mother station and the booster station.
Okay.
Mother station is where you get the gas directly fed from the GAIL pipeline, and where you do not have a pipeline connection, you get a cascade filled with our compressors, and then you have this cascade located at the stations where the gas distribution is required to happen. And where we supply a booster station. Now we have entered into this market. Our first two booster compressors have already been installed. So that is where we now see a further growth coming in from the...
So, Mr. Kolhatkar, do you see any scope to raise your margins beyond these current levels? Because I think for the last couple of years, your margin has been in this band of 13%, 13.2, 13.5. And now with the triggers that you just spoke about, is there scope to increase your margin band?
What we believe is that if you look at our segment results, we have been posting about 18 to 19% margins for the compression segment. There are a couple of segments which are pulling us down, which are non-reportable segments. We are trying to ensure that how do we get these segments where the costs get under control, or we monetize these segments. So that is something where at KPC level, Kirloskar Pneumatic level, we will be able to push our margins eventually. Since we are coming up with the new products, there could be some impact initially, but going forward, we will be able to improve our margins to the level that we aspire to achieve, close to 18%, which is our major compression segment margin.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking to us. Well, we need to take a short break, but before we do that, I just wanted to revisit the Laurus Labs stock just simply because of their guidance for FY23, where they have maintained their FY23 guidance for strong double-digit revenue growth and stable EBITDA margins. They've already done around 33% in terms of revenue growth for 9 months as per their presentation, with EBITDA margins of around 28%. So this is what they're guiding for in FY23. Remember, last quarter, they had cut their revenue guidance, saying that they won't be able to achieve that $1 billion revenue guidance. And that was taken slightly negatively by the markets, but nonetheless, the street seems to be quite happy with the performance. But like Mangalam mentioned, it is a significant correction from the 52-week high for Laurus Labs. So it's a little bit of an upside, but a long way to go to get above those 600 levels when you talk about the highs that they've seen. We'll take a short break, but we'll put the focus on Adani Group stocks on the other side. Stay tuned. That's the big story of today.
Welcome back to Halftime Report on CNBC-TV18. So there's lots happening in the market right now. The headline index may look flat, but don't be fooled. There's plenty of action beneath the surface. The follow-on public offer, the FPO of Adani Enterprises has now, there's an update coming through on that. So let me just take you through that. As on 12 p.m., the total subscription has come through at about 2%. The QIB portion has not been subscribed as of now. The HNI portion has been subscribed about 1%. Retail is a little over that, about 3% subscription for the retail portion. And the employee subscription has come in at about 8%. Early days yet, but these are the initial numbers that are come through from the Adani Group. Remember, we spoke to the management just a while back, a couple of hours ago, and they were very confident that the FPO will sail through as planned. They said that there's absolutely no problem with demand as far as the FPO is concerned. So these are the initial rates that are coming in terms of subscription. As on 12 p.m., total subscription is at about 2%. We'll keep updating you through the course of the day. But in case you missed out on that discussion that we had with the group CFO, we spoke about a whole host of issues, not just the FPO, but also, of course, the Hindenburg report and the debt on the books. Listen into what they had to say.
We are confident that on the institutional side, that the entire issue is from based on our discussion, roadshow meetings, etc., will be fully subscribed. And that's why we clarified the rumors were going on. So we clarified on Saturday night that that the FPO will proceed on current pricing and on the current timelines. So we are supremely confident that from an institutional perspective, we are there, but there will be some pullback in the retail given such pricing differential and the volatility. FPO will go ahead on the same conditions that we launched. Gross aggregate debt position in the group is just about 30 billion, of which $4 billion we hold in cash, approximately. just under $4 billion we hold in cash. Because the way the domestic bank is, there was some sanction limit. So if I just go on the sanction basis, it will be about 9 billion. The first thing is that 0% of Ambuja shares are pledged. What happens is that under SEBI's regulation, SEBI just has a regulation, which is a good regulation, which is simply that please report encumbrance. So if we say that we will hold 63%, under SEBI strict reading of it is considered encumbrance.
Okay, so that's the update with regards to the FPO as well as the management. I just want to put it into perspective in terms of the past 1 week, how exactly the Nifty Bank has performed. A couple of these key Adani stocks have performed. If you just look at the rates from Jan 20th, which is on Friday, the Nifty Bank is down around 6% We have Adani Enterprises, which is down around 18% Total Gas, which is down around 35%. This is just to give you a broader view in terms of what has taken place. Nifty relatively has been quite resilient, which is down around 3% So that's basically maybe a couple of numbers that you need to track in terms of how these stocks have been performing as compared to the Bank Nifty and the Bank Nifty as compared to the frontline index as well. Time for a break now, but up next, Riaz Thinga, who's the partner tax Grant Thornton Bharat, will be joining in to discuss budget expectations. Stay tuned.
Welcome back. Here with us on Halftime Report, and it is almost budget day. Of course, we know that direct tax collections have been very robust this year. GST collections have been fairly benign as well. So what lies ahead? What is the expectation from the tax front or on the tax front? Well, we have with us Riaz Thinga, partner tax at Grant Thornton Bharat. Riaz, thank you very much for being with us this afternoon. So, I mean, I'll start with your broad expectations. Given that there's been tax buoyancy, this is one of those years where we're not crying out loud. I think direct tax collections are already at about 87% of the full year target. Expectations are we'll surpass the full year target. So given this context, what would your broad expectations be on how the finance minister will rejig the resources at her disposal this time?
Yeah, thanks a lot. Primarily, always before the budget, there are a lot of expectations. But this year, the expectations are even higher because it is considered to be the last full budget of the government before the next elections. And given the consistently high inflation rate, it is felt that there's a real need to put more money in the hands of the people. So even our pre-budget survey showed that the largest number of the people who were interviewed felt that changes in the personal tax regime were of paramount importance. In fact, about 64% of the people said that changes in personal tax regime would be most important as compared to about 12% for corporate tax. I guess that, again, given that the collections are buoyant, maybe the government has more leeway to actually take some steps.
No, absolutely. And, I guess, people will instantly argue, saying that corporates got their fair share in the last couple of years with the reduction in the corporate tax rate, but we are yet to see that on personal income tax. Let me ask you this. There's only that much that perhaps can be done. There's a clamor for increasing the minimum tax threshold. There's a clamor for increasing the deductions under ATC, ATD, Mediclaim, so on and so forth, housing. But what, in your mind, perhaps could the finance minister look at in a realistic manner, given the fact that we also have a differential or a concessional tax regime which didn't really take off?
Sure. I think one of the main things, you spoke about ATC. I think one of the main things that one should consider is that while the limit needs to be raised, because it has been 1.5 lakhs for a very, very long time, but on the other hand, especially for housing, we need to do something. So we need to take out the exemption for repayment of housing loan, which exists within the ATC limits, and put that into a separate section, while at the same time we can increase the limit for interest deduction from the current level of 2 lakhs. So I think there we can make a big change. And of course, the other things remain the same on the on the expectation sides, increase what you mentioned, increase in the basic exemption limit, and also increase in the ATC deduction level as a whole.
Okay, got that. And the other sort of big talking point this time around is, expected changes in the capital gains regime. It is very confusing for anybody from a market standpoint, whether you're looking at listed equity, unlisted, you're looking at property, you're looking at debt mutual funds or listed government securities. If you were to advise the finance minister, let's say, what kind of rationalization would you want or would you hope for?
Great. Yeah. So you rightly pointed out that the most important thing in the capital gains regime is the complex nature of computation. So you've got different tax rates for different asset classes, different asset holding periods for short term and long term. Then there's a complex computational mechanism like assets acquired in foreign currency will be treated separately, indexation of cost, etc., and then varying surcharge rates. So one of the important things would be to make it simple. Just have two asset classes, and make it simple across the board with a standard rate. This entire thing leads to a confusion and to litigation. So I think that is one major thing. But there are some important elements that the finance minister may consider. Now today in the funding world, the PE funding, we have a lot of contingent consideration structures. Now that has become quite common in the current business scenario, but in the tax world, we have still not been able to provide clarity. So how will that contingent amount be taxed and when will it be taxed? That is something that needs to be looked at. And another very, very important one is when you speak about mergers and acquisitions and the tax neutrality of mergers and acquisitions, we also need to ensure that the overlap between Section 56 and Section 47 are actually, combined to make sure they're totally in sync. So if there is an exemption available under the exempt capital transfer transactions under Section 47, then the same thing should also be in 56, because this is leading to a lot of confusion.
Okay. All right. So more clarity on the way taxation works in M&A transactions. Got that. Quick final point. One aspect that always gets a lot of press is how the big global MNCs, particularly these big tech giants, the Netflixes and the Apples and the Googles of the world, how are they being taxed by the Indian government? So whether it is the concept of significant economic presence, that you don't have a physical office in India, but you have a significant economic presence, that along with the equalization levy that's levied on some of the, the earnings of these companies, do you expect any changes here?
Maybe some areas of clarity where there is an overlap between equalization levy and normal tax. That is where I guess that some clarity should come. But by and large, this entire tax regime has been put in place, and I think it is with an intent. So I don't expect other major changes to come in there.
All right, Riaz and Surbhi, thanks a lot for helping us understand and prepping us actually for the big budget day and what to expect on the taxation front. Well, we won't have to wait too long, of course. But now it's time for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We give you the question at 9:14 today. But in case you missed it, here's today's question. What percentage of the expenditure in the budget FY23 was allocated to defense? Your options are on your screen, 7, 7.4, 8 and 8.7. If you think you know the answer, or you just want to take a guess, send us your answers on Twitter. Post your answer as a comment on the question tweet on @CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Send us your answers. Remember, we'll announce the winner at 3 p.m. today. All the best.
Welcome back. Well, the bank Nifty is under pressure again, so it's down 1% as we speak, 1.2%. So close to 500 odd points shaved off for the bank Nifty. Within the index, just want to point out a couple of stocks which are managing to do well. So Sun Pharma stands out. It's up around 0.7%. They do come out with their numbers tomorrow. But before that, they have made an acquisition of 2 brands in the Indian market. They haven't disclosed how much they have spent on it, 2 or 3 brands, and that is in the anti-inflammatory market. So that's probably holding up in terms of a Q as well for Sun Pharma. But the bigger Q would definitely be the numbers which it will be releasing tomorrow, probably during market hours as well. But let's move on then, on to a special now. Like we've been telling you, CNBC-TV18 has compiled a list of the top 20 stocks to watch for this year. It's a carefully curated list of companies that warrant a closer look in 2023. Manglam is now standing by at the big wall with his stock. Manglam.
Well, that's right. You know, the stock on my radar, among the 20 stocks that we're watching out for in 2023 is an FMCG one. There on the screen, it's Colgate. The reason why we're watching out for Colgate is the big question. Will the new CEO deliver on this one? Prabha Narasimhan, of course, as we know, took over as MD and CEO from September 2022 after 14 years of being at HUL successfully. Prabha also, after taking over, spelled out the roadmap for growth. After taking over, she had 4 key points in that plan. One was to lead the toothpaste category growth itself. Secondly, premiumize through both science as well as innovation, new products. Third, lead category growth in toothbrush as well as devices. And fourth, build the personal care Palmolive business through organic and inorganic means. Now, this isn't something new. Analysts have said that this strategy is in line with the previous outlines as well. So now the important thing to watch out for will be execution. Will her HUL chops bring her, to execute on the strategy which has been there? Because Colgate over the last few quarters has been struggling. In fact, the last 4 quarters, the volume growth or the volumes have declined, and in the same time last year the volume grew in middling about 1% or so itself. Even the quarterly performances of the company have been poor. In fact, in the last couple of quarters, the results of the company have missed expectations. But then there are a couple of things to watch out for. In the previous quarter, they've increased their ad spends by about 150 basis points, and they've announced a partnership with Andhra Pradesh government for oral health awareness program as well. The execution, like I said, needs to be monitored. The stock has corrected about 14% from its 52-week high, has been an underperformer in the FMCG pack, and trades at 34 times FY24 earnings. The key risks, however, and the reason why the stock trades at a discount, slower than expected recovery and larger than expected market share decline would be something that I'll be watching out for. The new CEO, does she deliver?
Okay, that's a big stock to watch in 2023. But once again, a standard disclaimer. This is not a stock recommendation. The CNBC-TV18 editorial team does not advise on trading or investing in the stock market. Any investor or viewer is advised to carry out your own necessary due diligence on, on your own through a certified registered financial advisor for any kind of investment decisions that you're taking. Let's slip into a short commercial break. More on the markets and individual stock ideas on the other side of the break. Keep it with CNBC-TV18.
Back, we're inching lower for the market once again. 17,525 on the Nifty, below that 17,550 mark, and it's led lower by the Nifty Bank, which is down by almost 450 odd points. So every time we are seeing some bit of recovery, that recovery is being sold into, and that's the kind of market that we've seen today. If you just take a look at the cues coming in from the F&O pack as well, the high and the low on the Nifty today have a 250-point range between the two. So there is a fair amount of volatility. We've been talking here about the kind of events that there are this week. Tomorrow is the economic survey, then the union budget, and after that, we have the outcome of the US Fed decision. So it's understandable that the volatility index is extremely high. So the India VIX is at a 4-month high, and as we speak at 18.3, it's actually the highest that we've seen all the way since October. But I was looking at some data. The last couple of years in the budget week, the India VIX has actually gone ahead and spiked to around 21, 22 as well. And that's an important, indicator of the fear in the market. And at higher levels of the VIX, we do see a fair amount of option writing as well. 17,550, the mark which the Nifty is below right now, is the 200-day exponential moving average, so was a crucial support. And we are seeing writing at the 17,500 put. So those who are writing the 17,500 put for a premium of 150 odd rupees expect that 17,300 to 350, which is the 200-day simple moving average, would hold out as a support for the Nifty, whereas call writers believe that levels upwards of 17,700, which is above today's high, will continue to see some resistance, and that's why we continuously are seeing some open positions being built on the 17,600 call. However, the overall volumes on the option side ahead of budgets are extremely low because of the event risks that there are. The Nifty Bank, crucial levels to watch out for will be 39,750 thereabouts, because that indicates, one, the 10% decline from its all-time high, and secondly, the 200-day exponential moving average coming in at 39,788. And those are the levels from where we saw a bit of a bounce on the Nifty Bank today as well.
Okay, thanks a lot for that. So still holding on to the lows of the market. The 200-day moving average has been a crucial support for the Nifty. Let's slip into a quick break on the other side. We'll take a breather from equities and talk a little about the commodity space. Manisha Gupta joins in. She has with her Mayur Karmakar, who's the Managing Director, International Copper Association of India. And they'll, of course, be talking about prices in that market. So do stay tuned in.
Welcome back. Joining us on the show now is Mayur Karmarkar. He's Managing Director, International Copper Association. Mayur, hi, good to have you. And before we move any further, it really has to be about the kind of price rise that we've seen in case of copper. Last year wasn't so great if you look at YTD, but this year, the first month of the year has seen 12 to 13% of gains already. Whether it has been about global inventory decline or the production concerns from Peru and Chile or the China reopening, almost everything seems to be working.
That's correct. Now, if you look at the demand drivers globally, the World Economic Forum as well as the IEA, they are talking about the criticalities of the minerals going forward, particularly with the net zero plan. And with that net zero, all commodities will see a larger demand. And particularly in India, when we are also at the phase of the economic development where the Vision 2047, we want to be the developed economy. So the corpus need largely with respect to infrastructure, which goes into all, electricity related infrastructure, the new transportation, that is the electric vehicle, and also the demand from the consumer coming up for more wealth being created within the consumer. So the white goods and electricity consumer product will drive the copper demand in India in future. In terms of the global landscape, India is still much smaller in terms of copper demand. So the changes in Indian demand scenario will not really affect to the global demand supply situation in a great way.
Okay. So, Mayur, I was reading the report that you have put out for FY22 and clearly a big surge in number when you compare it to last year. And as you mentioned, we've come back to demand to the pre-COVID levels and 27% of an year-on-year gain is what we've seen in sense of copper demand. What government policies would you say have supported this and what sectors have seen the max growth when you look at demand?
The major demand has come out of the infrastructure, overall the renewable energy, and electric vehicle to some extent. Today, the two-wheeler has reached to 4% of the annual sale. Although the annual sale of the vehicles or the white goods is not as the pre-COVID level because the consumer confidence is still building up. Another growth area is the building construction sector. The building construction sector, particularly all the government policies of creating the housing for everybody, has seen the largest growth in terms of the demand for the copper in particularly with the last financial year. The growth in the building construction sector was 25%. Next to that, the growth in the power infrastructure largely was around 26%. So all sectors have seen the growth and particularly if you see the demand shift going forward, the infrastructure will take larger growth pace because of the larger focus on the clean energy solution, let it be the clean transportation like the electric vehicle. It could also due to the renewables or the energy efficiency program which government is investing.
Absolutely.
The industrialization is also driving that demand. The new systems are coming up. The infrastructure, the power infrastructure is far better. So you see the infrastructure overall will drive the demand, and all the policies which are related to the infrastructure are helping to grow overall copper demand.
Fair point. Mayur, also, what's your sense on how much does India produce in sense of copper? What is our dependence on imports right now?
See, unlike many other countries, we are not very rich in a mineral resource, particularly for copper. So copper, globally, if you see copper, the copper is available in the southern hemisphere, but the largest consumption happens there in the northern hemisphere. So the countries, the largest economy in the northern hemisphere are not mineral resource rich overall. So similar to the other countries, say China, Japan, India, story is not very different. Korea is same. So we have been importing the concentrate. But then the value addition, the value addition remains within each country. Unfortunately, in India, after the Tuticorin issue started, we became the net importer of the cathodes and also the importer of semis, total semis. So different phase of the value addition, we are losing largely to import. Let it be the cathode or even the rods which are used for making conductors and winding wire. Let it be the tubes used in air conditioning. So overall, at a different phase, our total import is around 45% of the total copper demand, which was there in last financial year.
Okay. Mayur, going forward from here, I mean, what's your sense on prices really? Because with the kind of demand expectations that you're putting forth and the world is putting forth as well, with various global banks and brokerages suggesting that we could be looking at $10,000 coming back or even beyond, new highs could be created, is what Goldman Sachs also has written. Do you see that kind of a demand growth coming in?
In terms of prices, I must say I'm not I'm bound by the antitrust law. But most important thing is that if you see the demand, how the demands are strengthened overall. Now, if you see the China, which was the largest, basically the market for copper, will they remain the same going forward? Yes, they will remain the same. Perhaps the growth in China may not happen as it was in the past, and the growth will shift to other geographies. The second part is in terms of the supply part. Supply is, being planned globally at a different level. But the most important, because all the countries are going for the circular economy, and there are various policies of ensuring the scrap gets recycled and the reuse in a country. So that as a resource will become important for the other economies. For example, we were the largely importer of the scrap. Now that the domestic scrap in country is becoming more visible because of the circular economy policy. And going forward, the way government is planning for getting the recycling policy, Maharashtra government has created the hub for the overall metal recycling. So overall, when your dependency on the scrap getting into primary use of copper, which is into form of the rods or the rolled product or the tubes, I think that will create the change with the traditional equation which has been put with respect to price. So,
all right,
speculative, but scrap is going to be the.
Okay, Mayur, Manisha, thank you so much for joining in and giving us your views on the commodity space. Just before we wrap up on the show, just keep an eye out on Bajaj Finserv, those numbers at the bottom of your screen. Net profit up 45%, close to around 1782 odd crores. Of course, we need to get into more granular details coming in from there. And a large part of these numbers also are taking into account the outperformance that we saw from Bajaj Finance's numbers. So we'll have to reduce that and see, what the other parts of that business for Bajaj Finserv have done this time around. So we'll be looking at their insurance business in specific. 45% growth in their net profit is what we have. The stock up around 2%. Bajaj Finance, which reported numbers up around 4%. With that, we wrap up on this edition of Halftime Report. Business Lunch comes up next.